Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider and certified veteran mortgage advisor. And today we're going to take a look at something that's really exciting. I actually going to show you what I have presented for you guys, how to get the best interest rate guaranteed. And this secret tip will piss off other loan officers, guaranteed, right? And why would this matter? Because rates are skyrocketing at a crazy rate every day. It's making it harder to buy a home, even disqualifying some people, and it's creating a lot of uncertainty in terms of the rates, right? So this is the reason why I want to share this knowledge with you because I think it's going to help alleviate some of these problems, right? So we're gonna wait a little bit for people to show up just to kind of uh, get things going, and then of course, you have any questions, you always put in the chat and ask the question in the chat, or you can unmute yourself if you're on Zoom, and of course, I'll answer any questions that you may have. Okay. So let's see here. I just want to make sure everyone's ready to go. I'm going to check to make sure my sound works because sometimes my sound does not work whenever I do these streams, which of course is never a perfect situation for me when I do these things. Does not work. Okay, so it sounds working. That's good. What's up, Steven? Thank you for joining and saying what's up. Hopefully, you get something out of this call. But yeah, I think we are ready to rock. All right, so let's go ahead and start the conversation. Right. Let's see here. Why am I not switching? Okay. That's my new logo. All right, quick introduction. My name is Larry Lee. I'm a certified veteran mortgage advisor and a branch manager of the Larry Lee team. I'm a licensed loan officer since 2016. The reason I think that's kind of funny is because I had a conversation with someone and my wife was there, and I was like, "Yeah, I think she's been in the business for a couple of years." She's like, "It's been like 5 years." I'm like, "Holy crap! That means I've been in the business for longer than you." So it's been 6 years, which is crazy, right? I also have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason why I bring this up is because I am marrying my two passions, mortgages and social media, to try to bring information and education and awareness about the mortgage process to the general public using social media, such as this stream that you're on right now or this YouTube video that you're watching right now. Okay. I am licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. Right. So again, my mission is that I love the mortgage business, but I was fed up with the lack of education and information clients were provided during their application process. So I created a first-time home buyer coaching class for mortgage clients that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. I also provide one-on-one coaching for those who want it. When I say one-on-one coaching, okay, my mission is to provide information and content about the mortgage process that loan officers do not tend to share when people are applying, and I want to make it on demand. That means you don't have to talk to me, you don't have to talk to anybody. You can actually Google it or search for it, and you'll find it right there and then. Right. So I'm not requiring you to give me an email address or anything like that. I want to just give you the information. Okay. But if you want one-on-one coaching, then you can't ghost me. You obviously have to engage with me so I know who you are, so we can coach each other, or I can coach you and get information from you. Okay. So you can't hide from me if you want one-on-one coaching. Okay? Unlike other loan officers, I made it my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference of how I help hundreds of people get on the right path to home ownership, with many of them becoming homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because they are taking the right step on the home purchasing process like they did, right? Basically, you're looking for education. That's why you're on this call, right? Or you're watching this video. Okay. The home buying process is very confusing to most people, but that is why I am here to simplify this process and make sure you're 100% prepared in the home buying process and to become ahead of the competition. And what I mean by that is I actually want to help you with the competitive edge by giving you intel information, information about the interest rates I'm going to give today, as well as help you get pre-approved and fully underwritten, so that when you go out and make offers, you can actually give a loan commitment with the offer. Basically, it's as good as cash, and you can close faster and earlier. And usually, would win more offers that way. It gets the attention. It basically makes you ahead of the competition when it comes to your pre-qualification letter because you're actually fully underwritten. Okay, it's called a TBD process that I can provide for you guys. Okay. My wife, of course, my wife and my kids, specifically Hunter and Bruce, because they're both on the spectrum for autism. They're both nonverbal, and I want to enroll them into ABA therapy because I have a lot of friends that I trust who are parents of children who are on the spectrum, and they said that ABA therapy was a game changer. So that's my goal for this year, is to develop enough resources to enroll both of them into ABA therapy. My other why is, of course, the mortgage business, but specifically veterans, right? And the reason why is because of this post right here. My father was living in Da Nang, Vietnam, during the fall of Saigon, and my mother lived in Saigon. My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get into the helicopter and on that boat. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those U.S. soldiers are more than likely veterans now. So thank you, vets. I owe you my life. And I really mean that, because my parents were rescued on U.S. military ships and saved from the fall of Saigon, basically the fall of Vietnam. And they met at a refugee camp in Hong Kong. And if they never met, they never would have had me, and I never would have my children. My wife might exist, I don't know, but my children would definitely not exist. So I owe them everything, right? So this is a class I talk about, or I teach, called the First Time Homebuyer webinar, where I cover these three basic things, and I kind of gloss over the information, meaning I kind of just give a general, education about it, but I don't get too deep into it, because there's no way to really explain everything in a 1 hour, maybe 2 hour webinar. But the purpose of these classes that I do weekly is to get deep and do a deep dive on the details of what I cover. So today we're specifically going to talk about one of the questions that people ask all the time, which is actually, hold on, these top 10 questions, and it's going to be how to get the best interest rate, which is number 10, right? But before we do that, I want to give a disclaimer. I'm not trying to piss anyone off or make anyone feel stupid. I'm simply trying to provide transparency, because most loan officers are doing a horrible job of telling you the truth. Also, any information I share is a general knowledge and acquired through training and experience. Every situation is subject to a case-by-case basis, and exceptions are always possible, especially with different lenders and financial institutions in states. But if, and before I get started, right, if you want, before I forget, if this is too long, like you can't stay for this whole video, whatever, because I tend to speak for like the next 30 minutes or so, maybe even longer, you can always text LarryLee.com, LARYLE.com, to 832-606-2193, and I will send you the PDF on how to get the best interest rates guaranteed. Basically, the class and everything I'm putting together, I will send it to you right away. That way, you don't have to sit through this, right? So again, if you want and you don't want to sit through this, or you don't have time to sit through this, you can always text LarryLee.com, LARYLE.com, to 832-606-2193, and I'll make sure I'll send you that information. Okay. So real talk, my own thoughts as a loan officer is basically my version of sharing information, but honestly, or with transparency, right? And of course, the top 10 questions. These are all the questions that people usually ask when they're looking to buy a house, and I'm addressing number 10, which is how do I get the best interest rate? Okay. Now, before I get too deep into this, I want to give a little bit of a commentary. Okay. See, the thing about interest rates, the thing about this particular subject is it's probably the fastest changing part of the entire home buying process, right? It's probably the fastest, most chaotic, most unpredictable part of the home buying process. Okay. So what I'm telling you today might be totally different tomorrow. It might be different a year from now. You might be watching this YouTube video 5 years from now, and you're like, this is BS. This doesn't make sense. Well, it's because things have changed. Okay. So I want you to understand that I'm providing you information that I want to help people with today's market, which is, if you want to know the date, is like 4/14/2022. Okay, where the rates are increasing like crazy since January. And they were low because during the COVID times, quarantine time, they were pretty low, and well, actually pretty low. They're historically low for a couple of years, and then they kind of skyrocketed, right? So I'm trying to provide this information to help you get the best rate in this environment. But you could also still apply this in most cases. In fact, there's a part of this presentation where I was coaching people on how to do this before the rate skyrocketed. Okay, so it will be applicable in most cases, but this specific class is mostly about addressing today's problems, which is the rates skyrocketing. Again, to the point where people are not qualifying. Like I actually had clients that didn't qualify anymore, but we figured out a way to fix it. But because of the rates, they went from qualifying under contract to no longer qualifying. Okay, so that's just a kind of little bit of a commentary on what we're about to take a look at. Okay, all right, cool. So let's see here. I talked about this last week, and the reason I'm talking about because it kind of adds to the tip I'm gonna give you. Okay, I actually said in the last class that what is the interest rate is probably the stupidest question you can ask. No offense to anyone, but like I said, it changes constantly. And if you don't have a contract, if you don't have a property, then the answer I give you is going to be incorrect, period. Okay. Because the interest rate involves the moment that you're asking for the rate as well as the address and everything. And the only reason why you want to ask that question is so you can lock the rate. Right? If you're using it to shop, if you're using it to compare pricing, you're gonna get a lot of bullshit, right? You're gonna talk to 10 different lenders, and 9 of the 10 lenders are gonna give you a fake number. And what I mean when I say a fake number, I'm saying that's not accurate, right? And sometimes intentionally, sometimes not intentionally, right? There's no way we can really know what your rate's going to be without an address and a credit report, right? We need to pull your credit because your credit affects the rate, right? So it's, I mean, people say just ballpark whatever. Okay, I'm going to give you the best rate possible based on the fact that you have perfect credit score, based on the fact that you have no debts, right? And nothing else matters, right? Well, that number will probably be different from what it would really be, at least for majority of applicants once they apply, right? So again, the question, what is the interest rate, is to me the stupidest question you can ask because you're going to get the wrong answer, period, right? And it's okay for that to happen because we can always, as loan officers, we can always be like, well, the rate's different now that you have a contract because it's changed since then, right? And I'm not subject to anything. And I remember one of the people attending the call, Bruce, he was like saying, you can't do you can't provide a verbal lock. There's no such thing as a verbal lock. Why is there no such thing as a verbal lock? Because that's not, there's no, you have to literally set in stone, this is the price I want. And it requires an actual commitment. It requires an actual how do I put this? You literally have to agree to the rate, and then we lock it with the entire system, right? The secondary market or the secondary department actually locks the rate, yada yada yada, right? And it's basically it's like, I mean, it's like a contract for the most part, right? You can't do a contract like that verbally. Okay. So again, asking that question, you ask me every single day is gonna be a different answer. That's the kind of the point I'm making, right? So it's a stupid question, right? So I put in the bottom, how do you get an accurate rate quote, right? Is you have to apply, provide full documentation, have a property, whether it's a refinance, meaning your own property that you already have, or a new property that you're trying to purchase, and then you can get a locked loan estimate. And that's the only way to get an accurate rate quote. Okay. So what I mean by that is, other than that, everything else is advertisement and subject to change and basically bullshit, right? People say, pre-qualifications are not worth the paper that they're written on. Same thing with a loan estimate that's not locked, right? It's literally not even worth a roll of toilet paper. Okay, so I would be very leery about trying to make decisions based on rate quotes that you're getting randomly from whoever, right? Whether you're searching online, whether you're calling a loan officer, I had loan officers, people who call me, they find me off of Google, and when they ask me the question, I'm like, well, I can give you what I see today, but I just want you to know that I can't really give you the most accurate information without actually having a credit pull and in a property. And of course, sometimes they get mad, like, well, the other lenders were able to give it to me. Well, yeah, because the other lenders want to buy your business, they want to earn your business, they want to sell you, so they're going to tell you whatever you want to hear. But 90% of the time, 95% of the time, maybe even 99% of the time, it's bullshit. It's advertisement. It's a sales pitch. Okay, so yeah, congratulations, Mr. Customer. You got basically pitched 9 different times. I'm giving you the truth. right? Why do I give you the truth? Because I don't want you to come back at me and get pissed off that I gave you false information. Number one, and number two, if that's the only reason why you make a decision, then you and I might not be a good fit because I offer more than just a rate. Okay, and I'm going to break down why rate might not even be the right thing to look at whenever you're trying to find the best lender. So I'm going to break that down in this call. Okay. All right. So again, I just want to go over that to let you know what you need to do first to get the most accurate rate. So I'm going to show you on a loan estimate what you're supposed to look for. Okay, so again, you're looking for an accurate rate quote. Okay, this right here is a locked loan estimate. Okay, you have a rate right here. This is the first page of the loan estimate. Okay, if it doesn't look like this, it's not a loan estimate. Like I've seen people send itemized fee sheets that's like created from like a PDF or like a Excel spreadsheet. No, the mortgage industry has made a streamlined process so that every single loan estimate looks the same in order to avoid confusion, which makes sense to me, right? If you're looking at 10 different loan estimates, you want to make sure it's easy to compare, right? So they create a standard. This document that you're looking at, this is a loan estimate that's standard. I mean, pretty much every single mortgage company is going to use the same format. So it's going to be really easy to compare. Okay. They did that on purpose because now they're getting to the point where they're focused on disclosures and communication and information being accurate and easy to read for the client, because the confusion part is what created the issues back in like 2005, 8, 2005, 6, 7, 8, whatever, right? Luckily, I wasn't there. Okay. But yes, they made it so it's really easy. So when you look at a loan estimate, what I'm showing you right now is going to be pretty much what you're going to see with any lender. Okay. So the interest rate is going to be on the first page right here. It's going to tell you if it's locked or not. In this case, it's locked. And then right here, you'll see like the actual cost of the rate. You see right here, it says 0.25% of loan amount points. That's when you're getting charged. So this person has a 3.875, but they're getting charged $405 for it. Okay. And a lot of people don't think about that. A lot of people don't see that. Okay. And I'm going to address that later on. So you might get a lower rate, but you're actually getting charged points. So let's say in comparison, let's say I have a 4, right? I have a 4 and they have the 3.75. I actually might be the same price as them if I was to go to 3.75, but I told them the 4, but the 4 doesn't cost anything, right? So in that situation, the quote is actually the same, but the number looks better because they're charging you points right here. So you have to kind of be aware of that. Okay. All right. So and actually kind of get deeper whenever I look at this. So this is what the loan estimate front page, the first page looks like. This is what the second page looks like. Okay. So again, you have to look to see if it's locked. See, yes, it's locked into this date, right? So that tells you that that's how long you have the rate locked for. Okay, so this is a locked loan estimate. This is what you're supposed to get if you want to get an accurate rate quote. Because even if you get a loan estimate, if it's not locked, again, it's advertisement. Okay, it's not worth the paper it's printed on. Okay, so you need to have it locked. Right. I've seen a lot of people give me loan estimates, say, yo, this person quoted me this much and this much and that much. And I go, where's the loan estimate? And they give it to me and it's not locked. I'm like, sir, this is not a locked loan estimate. There's no way I can use this as a comparison. I mean, this might as well be blank, right? Because not locked means it can be whatever. It can change tomorrow. You might tell me it's a 4 on this piece of paper, but it'll be a 5 tomorrow because it's not locked. Okay. So please get it locked in, then we can discuss what we can do for you. Okay. So yes, you need a locked loan estimate. Okay. And you also have to look at the discount points. This is a part that a lot of people don't even think about or even notice, right? And sometimes it's different. Some companies charge an application fee. Some company charges an underwriting fee and a processing fee. That's what we charge. So it's very clear what our fees are: underwriting and processing. And that's it. We don't charge any origination. Okay. But some places might charge an application fee. Some places might charge an origination fee, which is, what is that? What's an origination fee? It's like, well, they kind of just grouped it all together. They decided that they're going to pay for underwriting and processing, and whatever else they want to profit off of, they're going to just lump it together. Rule of thumb: if it's like over $1,500, over $2,000, you're getting ripped off. Okay, because underwriting processing for the most part should not be more than $2,000. So anything beyond that, they're trying to make a profit off you. They're trying to make more money. So if they charge you a percentage, like origination fee, 1%, that's their way of making a crap ton of money off you. Unless you like ask for a $65,000 loan, then of course they can't make that much. But if you're buying a $500,000 house, let's say a $500,000 loan, that's a lot of money, right? 1% is a lot of money. That's $5,000 plus, right? So you're getting overcharged there. But yeah, so origination charges is basically just everything grouped together. So you can't read the origination charge. You have to look at the origination fee or loan amount of points, right? So Again, the reason why I'm pointing these out because you might get a lower rate, but in reality, you're getting charged for that lower rate. So be aware of that part. Okay, that's something that a lot of people don't understand. And of course, I'm going to use an example here. Not that I did it on purpose, but I just ended up using it because I found it online. But a lot of these larger online lenders, they're really good at that. They're really good at giving you a low rate, but then like putting origination charges and not really putting it up. Okay. All right. So let's see here. So okay, here is my when I do my class, I talk about the top 10 questions asked by homebuyers. I literally explain real quickly how to get the best interest rate. So I'm gonna read this over. Okay. First, you have to choose your second favorite lender. So you already have your favorite lender. Let's pretend that's me. Let's pretend I'm your favorite lender. And you choose, I don't know, Gary Lee. So you got Larry Lee and Gary Lee, right? You choose Gary Lee as your second favorite lender, right? Like he's the person you're willing to work with, but he's not your favorite, right? And I learned this in the car business, so this is why I'm using this example, or I'm using this method. I'll just give you a quick summary as to what this car, how you would apply in the car business. If you have a dealership that's your favorite dealership, let's say it's your closest dealership. This is where you do all your oil changes. This is where they have their favorite coffee, whatever. It's your favorite dealership, so you want to buy from them, right? Well, you don't negotiate with them. You go to your second favorite dealership that you might be willing to do business with, get your oil changes and their coffee's okay, and you get them to give you a written offer of what they're willing to sell you a certain car. Then you take that offer and you bring it to your favorite lender. Say, hey, if you beat this, I will sign with you guys because you're my favorite. You're my favorite dealership. You're the closest and everything. So if you can beat this, I'm definitely going with you. But if you match it, then I probably will go with you because again, you're my favorite, right? And you don't have to tell me if you don't want to, but I'm just giving you what I believe is the best way to do it, right? You tell them that they're your favorite lender. I mean, not your favorite lender, your favorite dealership, and I want to buy a car from you, but unfortunately, you have to match this price. Here's a written offer. Same concept with what I'm trying to explain to you guys. Okay, you apply and you get pre-approved with your sake. So you have to go with two lenders at least. Okay, you have to choose your second favorite lender. You have to apply and get pre-approved. You have to find a house and get a contract and send it to that lender. So yes, you have to get a contract because again, you can't lock a loan. You can't lock a rate on a loan estimate without a contract. Okay, how do you get a loan estimate? You got to be under contract. How do you get a locked interest rate? You have to have a locked loan estimate. Okay, so yes, you have to find a house, get a contract, and give it to the lender, and then have them give you a rate quote, meaning a loan estimate, which I just showed you a screenshot of what that looks like, and lock it. Okay, now you can float if you want, but then you can't do anything until you lock something. So basically, you stop there, right? If you want to float means that you're not ready to lock, right? You think the rates are going to go down or whatever. But in this environment, you better lock right away, right? We say if you love it, you lock it. In this environment, you better lock it because it's going to be higher tomorrow and the next day and the next day. Okay, generally speaking, right? I mean, I can't guarantee that, right? So if you get a second lender that you're willing to work with, you get a loan estimate, you lock the rate. In fact, you should lock it immediately. Like, hey, here's a contract, can I lock the rate? And they should be able to because all they need is the address, right? So you say, hey, here's a contract, can I please lock the rate right now? And then you lock the rate itself, and then you get a loan estimate with the lock rate, which I already showed you a screenshot of that. Okay, you don't have to sign it, right? You don't have to sign it. You don't have to do anything. The lock loan estimate is basically their offer. If you do business with us, if you move forward with us, this is what it's going to look like, right? Sign here to basically approve of us working for you based on these numbers. Okay, so you don't have to sign it at all. You can just get the lock loan estimate and just hold on to it, right? There's a certain amount of time that you can keep it around. Like it can't last too long, especially with the expiration of the lock, right? So if you have a 15-day lock, you have 15 days, probably less to make that happen. If it's the 30-day lock, you have 30 days or less, and then 45, yada yada yada, right? So you can get the lock loans, but you don't have to sign it. Okay. And then again, I put you repeat if you want more than two options. But let's say you only want to do it one time, right? So you get the lock loan estimate, and then you bring to your favorite lender, right? You go, hey, Mr. Favorite Lender, and of course you do the same thing. You get pre-approved, you get a contract lender, and then you send the lock loan estimate from the second favorite guy, right? Well, actually, if you want to be really smart, you get them to quote you. You get your favorite lender to quote you, right? And if it's already better, then there's your work's done, right? Because it's better than your second favorite lender, so you already know your favorite lender is also the best deal. So We're done. Like no longer need to do anything, right? Unless you want to hear me out. You want to hear me out. There's a special trick that you're going to be able to do to guarantee a low rate no matter what, right? But let's say you're just happy, right? You're like, okay, you know what? You have a better rate. I'm cool with it. I'm gonna lock it. You're done, right? Now, if you are not ready to lock it, you show him the lock loan estimate, and he says, well, I can match it, then of course you win. But if they can beat it, of course you win. But if they can't beat it, that actually might be in your favor. Just bear with me when I explain this, okay? But let's pretend they can't beat it, right? Well, then you know who to go with. You're going to go with the second favorite lender, okay? Because the second favorite lender has the better rate, and you're willing to work with them, yada yada yada, right? Now, right here, I put once the rate is locked, you can't change it. It can only expire. So once you lock a rate, because people ask me all the time, what if I lock the rate today and the rates go down? That's the point, sir. You lock it, meaning you can't go up, you can't go down. You're securing, you're committing to that number, right? It's to protect you, but also you cannot. I mean, it would be a perfect world if the lender was like, okay, this is what the rate's going to be. Oh, this is going to be lower. Okay, we're going to give you the discount. Lenders would go out of business if that's what happened. If everyone had to change their lock to make up for whatever changes in the market, lenders would not survive for very long. So that's why we lock rates, and it's a commitment, it's an agreement between both parties, no matter what happens. Okay, of course, exceptions are made if there's a dramatic drop. You can do like a float down. It's like a process. Not I don't know if all mortgage companies do it, but there's a process where you can negotiate the low rate because it dropped down dramatically. But that's way deep, and I don't even want to talk about that, right? Because that's like a never happens. It happens in a blue moon, once in a blue moon type of situation. Okay, it's not something that you can do every single day, right? But just so you know, there's that exception. Okay, but again, once the rate is locked, you can't change or expire. That's why you lock your second favorite lender first. Okay, and it's okay to tell your second favorite lender that you're shopping. The reason why I talk about locking your favorites is your second lender first, because if you lock with your second favorite lender and the rates were to go down, okay, and this is where I'm going to talk about my tip. The rates go down, you're not stuck with the second lender. You can go talk to your first lender and be like, hey, the rates are lower, right? It's like, yeah, it is lower. Oh, well, now you can beat Mr. Second favorite lenders, Gary. You can beat Gary's rate now. So let's go ahead and lock and move forward with you, right? So that's the reason why you lock one and not the other. Okay. Of course, if you're satisfied, like I said, if you have a second rate, second favorite lender lock loan estimate, you show it to your first, and the first can beat it, and you're cool with it, then go and lock it and just be done with it, and you can just move on with your day, right? But if you want to be aggressive, like what I'm going to teach you how to be aggressive with trying to get the best rates, then you don't want to lock it yet. I'm going to show you what to do. Okay. All right. So, real quick tips, or I'm going to try and make this very easy to understand. Okay. How to get the best interest rates. And this is general information that you can probably find online. You probably heard it before. Maybe if you applied before, a lender has told you this. Maybe a real estate agent has told you this. Maybe a credit repair person has told you this. Okay. But basically, these are the things that can make sure that you get the best interest rates depending on where you're at, right? And before I get into that, I want to make sure I don't have any questions. So give me a second here. Oh, what did I do? Oh, there it is. Okay. So let's see if there's any questions here. Bear with me as I look, because this call is designed to help answer any question that people may have. Okay, no questions. Does anybody have any questions? Gives me a break to take a little quick sip of my coffee. Any questions? You can put it in the chat. You can unmute yourself. You can DM me, text me, whatever. All right, no questions. So hopefully you guys understand or smell what I'm cooking, right? All right, let's go back to the presentation. Again, they're going to tell you you need to get your credit scores as high as possible, right? Because obviously, the higher the credit score, the better the rate, right? They're also going to tell you to have your balances low. Now, the number, there might be different versions, but I think that if you just have 1%, you're going to get the best, right? I don't say 0%, meaning paid off, because sometimes creditors might actually penalize you if you have no balance. Like you have $0, then it's almost like in their mind you're not a paying customer because you're not paying interest. Even if you're paying interest on $1, you're still a customer, right? But if you're paying interest on zero, you're not a customer. So they might actually penalize you. So that's why you have to be careful what you pay down and what you do when it comes to paying off debts in order to increase your credit scores. Okay, so I say 1% is going to be the best, but maybe 5% is good, maybe 25% is good. Definitely anything above 5% is going to be questionable. Anything above 30%, 50% is definitely not good. Okay. And when you work with a lender to have your credit pulled, if it's not me, there should be some information on the credit report that tells you what additional points you can gain potentially. So let's say your credit score is a 650, and then it says potential points 50 points. What that's telling you is you're actually a 700 credit score, but because of your high balances, they penalize you by lowering your scores. So you're a 700, but because of your high balance, you're a 650. They took points away. This is why sometimes you might get some confusion when you're like looking at your credit report from a self pulled or self-reported or self-purchased credit report, like Credit Karma or TransUnion or Equifax. And I actually have a video about why Credit Karma is bullshit, and I have proof of it. And maybe I shouldn't have said it that way. Credit Karma does not give you accurate information. Let's just put it that way for a mortgage purchase. Okay, but I have a video for that, so there'll probably be a link somewhere on the left, probably your right, somewhere over here, right? I don't know, but or in the comments in the descriptions. But there's a video where I actually break that down. Okay, but the point is that you might see different scores there versus what your lender might look at because of the balances. That might be something that they don't consider, right? Uh, Again, I don't know for sure because I don't engage with Credit Karma. There's no need for me to engage because Credit Karma has nothing to do with me and my business. Okay, but low balance is always going to be helpful no matter what. So you might see a potential score improvement on your credit report, or your lender might see it, and that basically means you have to pay down your debts. How do you get those points? What do you do to get those points? So it depends on which lender you talk to. I myself like to create credit plans if possible because I do want to give my clients the best scenario possible, which means the best interest rates. So I'm going to try to get them the best credit score. So I will give them a plan, even if they have like really excellent credit. I'm still going to give them a plan to get the scores higher, right? If it's possible. If I look at a credit report and it says 0 points on potential improvement, then there's probably nothing more they can do. But if I see like 20 points here, 30 points here, 10 points here, whatever, then there's potential, and I'm going to give them a plan on what they need to do, meaning what they need to pay down and how much in order to get those points. Right? So credit plan, credit repair, I don't do. I'm not a credit repair person. I'm not sure if I would endorse any credit repair people at this point because I don't engage with them a lot. Okay, so I can't speak on anything like that, right? But it's possible to get your credit scores repaired and fixed and improve your scores through credit repair, right? I know that I've heard many people enjoying the ability to purchase a home and getting better credit scores through credit repair. Okay, and of course, there's other questionable methods in order to get your scores up and get better interest rates. Like I don't know, authorized user type stuff, whatever. Again, these are things that loan officers, for the most part, will tell you. Right? They were either trained on how to discuss this kind of information, or they've had experience, whatever. Right? They've heard it online, they've seen it on YouTube, maybe they watched my video. Who knows? But all loan officers will tell you this. Okay. So the next thing is what loan officers may not tell you. Right? Um, and this is the method I just taught you in my 10 questions. I gave you number 10. I took it two competing loan officers, and this is the part that I think a lot of people don't really think about. I think this is something that a lot of people don't understand or they're not aware of. Loan officers should be right, but you should not be focusing on rate. You should focus on APR, annual percentage rate. I don't know. There's a definition for it. Like it's if I was to describe it, it's basically the total cost of your loan translated into a percentage rate, right? So it's not really what you're paying on an annual percentage rate. It just breaks down the cost of your loan and the fees and everything, and it uses like some sort of formula or math or algorithm to be like, okay, well, this is really what you're paying, like as interest, right? But it's not really calculated that way. But the reason why that's important is because the more your loan costs, meaning fees like origination fees, discount points, the higher your APR is, right? So I'll give you an example and I'll actually break this down, right? You might see a person with a 3% interest rate and a 4% interest rate. The 3% interest rate costs you 4.5 in APR, and the one with 4% interest rate costs you 4.25. And you're thinking to yourself, wait a minute, that's kind of confusing. Why does this guy have a 3% interest rate, but it costs 4.5 in APR, and this guy is a 4% interest rate is 4.25 APR? When you break it down, the guy with a 4% interest rate and a 4.25 APR is actually a better deal. Just so you know, okay. Even though on paper you see 3% versus 4%, and who knows why the rates or the cost is that different. It could be because of discount points, it's because maybe they're charging an origination fee. It could be many of things. But the bottom line, if I was to tell you what you need to focus on to compare, you look at APR, not the interest rate. But people talk about rates and what's the lowest rate, whatever. Sir, you're asking the wrong question. You're probably trained this through like a sitcom that you watch, or maybe grandpa told you how to shop for a rate, whatever. It's not how you're supposed to look for the best lender. But I'll entertain you by giving you the information that you want. But APR is the most important thing. Okay, and APR is on the loan estimate as well. I'll put that out to you. Okay. Okay. So again, the next method is to get a lock rate from the second favorite and compare to the first guy or your favorite, right? And the decision should be easy, right? Like I said, you have a lock loan estimate with your second favorite guy who you want to go with, guy or gal, right? You want to go with them. And if your first guy, your favorite, can't beat it or can't match it, then it's easy. You're like, oh, well, I'm going to go with a low rate. Unless you really love the guy. And this happened to me where I actually had clients who brought me a loan estimate, a lot loan estimate that was higher than mine. I mean, lower than mine. So I was more expensive. And they still went with me because they liked me more, whatever, right? And I'm not going to argue with that. I'm like, well, Mr. Customer, in reality, I'm letting you know you are getting a better deal with them, just when you know. But I'm honored that you want to work with us. And they're willing to pay for the extra service or whatever. Maybe they maybe thought it was sexy. I don't know, right? But for whatever reason, they were willing to pay more to work with me. Okay, and that's really kind of a compliment. But at the same time, you can be that person where you generate so much trust and goodwill, and people like to buy from like who they like, know and trust, that maybe paying the extra rate or extra fee, whatever, is worth it to work with you, right? They'll make concessions. They'll wait to work with you. Okay, they're asking, they're begging to work with you. Okay, so there's nothing wrong with that, right? But in reality, if you don't have that situation, you're just like, okay, I'm comparing lender A to lender B. Lender A is my favorite. Lender B is my least favorite or my second favorite. Lender B has a lock rate. Lender A can't beat it. They can't match it. I'm going with lender B. This is gonna be easy for the most part. Okay. Worst case scenario in this situation is you can let the lock expire. Right. Let's say it's a 30-day lock. You let it expire. Okay. Now there's a thing though. People think that, okay, if I'm locked at a rate I don't like, I'm gonna let it expire and I'm gonna relock it. It's not how it works. Okay. Lenders know that you're trying to pull a fast one, right? You don't like the rate, you're gonna let it expire. You're gonna purposely drag your feet, let it expire, and then try to relock it. They make you wait another 30 days, right? And if you try to lock before that, they're going to give you worst case pricing. That means whichever is worse, the current market or what you had, they're going to make you choose the worst one. So you can't cheat the system. You can't game the system, right? Let's say you have a 4 and the rates are 3.75. You're like, okay, I'm going to let the 4 expire and wait until the 30 days. And then whenever it expires, I'm going to try relocking it at 3.75. They're gonna be like, no, sir. Because of the rate expiration, the rule is you have to wait 30 days in order to relock it again. So at this point, you're subject to still skim the 4. Even though the current market rates are 3.75, you're still stuck with the 4, right? So in reality, your rate doesn't expire in 30 days. Your rate will actually expire or disappear after 60 days. Okay, I think that might be across the board thing. I don't know. I know for sure my company does that, but that might be across the board, how most lenders, most investors work. Okay, so you can let a rate rate lock expire, but then you have to wait another 30 days, and then you can try to get a better rate. Okay. But if you're trying to purchase a home, that's probably not going to fly. Like the builder or the seller who you're under contract with is probably not going to be like, yeah, I'm not going to wait another 60 days just so you can get a better rate. No, I'm just selling to someone else, right? So you have to take those into consideration. Now, if you're doing a refinance, different story, right? If you're willing to wait 60 days, then wait 60 days, right? That's up to you. Okay. But again, that's, I wouldn't call it a strategy. That's a thing. That's a part of the process. Okay. And I'm going to kind of talk about how you can use that to your advantage. Right. Okay. So again, I talked about what most loan officers will tell you. I talked to you about what not all loan officers will tell you, and I just gave you the information. And I'm going to give you like some details about the APR such, what to look for. Okay. So on the third page, so I showed you page number 1, page number 2. Page number 1 has like basically the fact that it's locked up top right, and page number 2 on the top left shows you what the fees would be, including origination points. If there's none, you're good. That means you're getting at par. Par meaning 0, right? So if you don't see any origination points, you're getting at par, right? Based on what the lender is offering you. Okay. If you see points, they're charging you for that rate. Okay. So if you want par, you're gonna be like, okay, I want to know what the rate would be at par, meaning I don't want any discount points. And there's a chance that the rate would go up. Right? There's a chance they can't do it because sometimes the rates are so high, you have to pay a discount. In most cases today, that's what's happening, right? Like you have a forced discount to kind of balance out the rates. Okay. But there's a chance that you might be able to say, hey, I see a discount point here. I don't want the discount point. How much would my rate be? And they can tell you. Now, the cool thing about a lock is that it's not locked on just that rate. It's locked on the pricing for all rates, right? So let's say you locked at a 4 with no discount points, but you decide you want to buy to a 3.5. And let's say it costs you 1%, right? It costs you, let's say it's $400,000 loan, it's going to cost you $4,000, right? You might be willing to pay that, right? I don't know, it might not make sense, but you might be willing to pay that to get a 3.5, right? You can always do that because you lock the pricing for all rates that for the next 30 days, not just that rate. So you can always buy it down if you want to. Okay. And that's a normal thing to buy down a rate. Okay. So again, that's page 2. Page 3, this is what you're going to see. Look at the APR. This is ultimately what matters. Okay. So you might see a 3% interest rate, but you see a 4.274 annual percentage rate. And then you see another person with a 4% interest rate and their APR is 4.1, you're getting a raw deal with a 3%, the 3% interest rate. The lender is charging you somewhere. Okay. So you have to be mindful of that. This is really the bottom line. This is really what matters. Okay. It literally says use these measures to compare this loan with other loans. See, it literally says that, right? And it's funny because the loan officer never points this out, right? No one ever thinks about it. No one ever asks about it. What's the rate? Oh, it's locked. Okay, that's the fee. Okay, cool. No one looks at page 3. No one looks at page 3 when they should. They should, because that's really the bottom line. They literally tell you, use these measures to compare this loan with other loans. It's black and white right there. But I bet you most people on this call did not know that line was there if you saw a loan estimate before. Okay. So again, APR, annual percentage rate, that's the best number to measure different loans. You see what I'm saying? Right? So in reality, you get your second favorite lender, you get them a locked rate, you get the APR too, right? And you show to lender number 1. Lender number 1, the favorite lender might be like, hey, you know what? I can't beat this rate, but look at his APR. His APR is way higher than mine. So he's charging you for that rate. So I can't beat that rate. But for the most part, my APR is lower than his. So I actually have a better deal. FYI. Right. So pay attention to those type of things. And ask your loan officer. Demand is like, what is the APR? Right? And it'll be on the loan estimate and they can show it to you. Okay. But of course, when you get the loan estimate and it's locked, you'll already know just by looking at page 3 because I, Larry the Mortgage Guy, showed you how to do it. Okay. All right. So again, focus on APR, not rate. I always tell people the rate is actually a distraction. Right? It's advertisement. The APR is really the bottom line. Okay. So you really should be paying attention to that. Okay. Now, I'm going to read this. Let's see how much time have I been on this call. 44 minutes. That's okay. I think I can have time to read this. This is a pitch that I send or consultation I send to my clients. Okay. I'm gonna try to summarize as fast as possible, but I'm trying to protect them, right? So when they ask me for a rate and they're saying they're shopping, I'm be like, okay, I'm okay with that, but I'm gonna tell you how to shop, how to compare. Okay. So I go, thank you so much for the chance to earn your business. You can reach out to me anytime. Here's my phone number, 832-606-2193. Also remember to ask for discount points or broker fees. Oh, and the credit scores, right? You want to ask for this information you're going to shop around. Okay. And there's something they may not disclose over the phone or in person. They will sneak it in the loan estimate, which I like recommend should be locked in order to get honest pricing. Honest, right? Because it can't be changed. Here's an example of a fee that's added without being disclosed beforehand as either broker fee or points, right? Origination charges, right? Look at the fee, 7,856. What fee are they charging, right? I mean, again, I charge at most $1,500 for processing and underwriting. That's my company. There's nothing else that we're charging. This guy's charging 7,856, right? You have to be mindful of this kind of stuff. Okay. And here's another example, right? This guy's charging 2.5% in points, right? So you might have a pretty rate at 3%, 4%, but they're charging you 2.5% to get that. Right? See, processing underwriting, that looks fair. 850, 300, that's actually low. Processing underwriting, that should be opposite, whatever. But yeah, they're charging, and maybe that's why they're charging so low here, because they're charging so much here, right? So you have to be mindful. You have to look at the second page, top left, loan costs. And there's a difference between loan origination fee and origination charges. Origination charges is like the total of everything, right? Processing, underwriting, attorney fees in Texas, we have that. And of course, the points. Origination fee or broker fee is totally different. That's like me just charging you whatever I want to charge, whatever the number it is. Okay. So if you see the right arrow that shows the fee is greatly affected by an extra 2.5% points. Okay. So they'll advertise that. I can't believe I have a typo right there. They'll advertise 3.75%, but charge a rate. And if you notice on the screenshot below, the rate lock is X'd out to no. And I'll show you what I mean by that. It means that this can change and nothing's set in stone. So unless they lock your rate, you're dealing with magical numbers, which is the truth. See? No, not locked. And again, it's only quick loans because I saw the screenshot. That's the only reason why. I'm not trying to throw them under the bus or anything like that. Okay. But like I said, they actually have a 3.75% interest rate is what they're advertising, but they're charging 2.5% in origination fees, in points, right? So you have to be mindful of those kind of things. Okay? And again, this is not even locked. So that number can change. That can go up, then go down, right? And I go, here's information about APR. Also, I've been doing a lot of pricing comparison for my clients and want to send you some information I've been sharing. This copy and pasted from another lender quote. I beat even when the interest rate was lower. So it means their interest rate that was advertised, that was the locked loan limit, whatever, was lower, right? And I still beat them in APR. Okay. I noticed that their interest rate discount might be lower, but the number was APR. Their APR was 3.104%, and mine was 2.640%. There's a big difference, huge difference. Okay. But, of course, their rate looked better because of the big number that they're looking at, right? So doing the math, the APR is 0.46% higher than mine. And if you do your research, you'll notice that experts say you should pay attention to APR more than the actual rate. Apples for apples, you can still get the same rate as this lender as you could with ours for one simple one-time fee. But APR emphasizes the cost of the entire loan. It leads me to question, why is there such a big difference? If you review the information from Investopia.com, a well-respected and followed finance investment website, you would find this remark. This, of course, this says a bunch of stuff right here. I just highlighted the APR, however, is the more effective rate to consider when comparing loans. See, they tell you here interest rate, advertised rate. See, that's why it says advertised rate, right? Or nominal interest rate, right? They talk about interest rate, but they really say right here the APR, however, is the more effective rate to consider when comparing loans. Again, no one talks about this. No one calls me and say, "Hey, what's the APR?" They ask me what's the interest rate. They don't ask for the APR because they don't know, right? And loan officers they roll with it. Oh, you want the interest rate, sir? I can give you the interest rate. Let me give you the interest rate. Da-da-da-da. I'm not going to tell you that there's fees, whatever, because they can always change tomorrow because you don't have a contract with me. You don't have a credit application with me, so you can't. I can tell you anything right now. And let's put it this way: if you have an application, if you have a credit report, if you have an address, I can't lie to you about the rates. Okay, let me emphasize this. Okay, this is probably like the biggest, from my perspective, the biggest takeaway you're going to get from this call. Okay, other than how to get the best rate. Okay. But again, if I have your application, meaning you applied, okay, you applied, I have your application, I have your social security number, I have everything, and I have your contract with address. If I say a rate out of my mouth and you want to lock it, I have to lock that rate. I can't lie about that because I'm quoting you based on all the correct information. I cannot lie about it, right? So, like, let's say I see it's a 4 and I tell you it's a 3 and you tell me to lock it, I'm screwed. I literally just gave you bad information. I lied to you. I truly falsely advertised, right? Because if you have your application and you have your address and you're ready to lock, and I tell you the rate to lock, and it's not what the number is, you're gonna find out. Hey, yeah, Mr. Customer is 3% right now. Okay, let me go and lock on the 3%. I'm like, okay, I'm gonna lock it, and you're gonna be like, wait a minute. This is a 4%. I thought you told me 3%. No, this is not what we agreed upon. Or wait a minute, you told me 3%, but you didn't tell me it's gonna be this many in discount points. No, I'm out. Right? That's only possible with an application with address. If there's no application, if there's no address, I can tell you whatever I want, and you can't make me commit to anything. Right? This is probably what like Bruce was frustrated with the whole like verbal lock. Okay, I can't verbal lock anything. It's either this is the pricing. I'm gonna press the button to lock it if you want it. If you don't want to lock it, then I don't press the button. I can't do that without an application, and I can't do that without an address. So I can tell you whatever I want, right? So again, let me review what I just said to you, so you can understand the point I'm making. Okay, I want you to understand that if I give you a rate and you have an application and an address, if I give you a rate, it has to be real and honest, because if you tell me to lock it, it better be locked. Right? I can't lie to you about that. I can't give you bad information on that. The numbers are going to be there. You see what I'm saying? But if I don't have an application and I don't have an address, I'm not committed to anything because there's nothing for me to lock. I can't lock anything. Yeah, your rate's going to be 2%. Okay, let me go and lock it with you, Larry. I have no application. I have no address. I can't lock shit. There's no locking anything. So I can give you 2, tell you it's 2, and it could be whatever I see here, but you're hearing me saying 2, and I can't lock anything. You see what I'm saying? So therefore, the realm of error is a lot higher without a contract and without an application. There's no room for error if there's a contract and an application. You cannot, there's no error. I'm telling you what it is. You tell me to lock it, I have to lock it right there and then. You see what I'm saying? So that's probably, again, the biggest takeaway from this call is that if you want to get an accurate rate quote that they can't bullshit you on, then it has to have an application with an address. And if they tell you the rate, it has to be the truth, because if you ask them to lock it, they must lock it. You see what I'm saying? All right. So hopefully you got something out of that, because that's something I really emphasize. And I'll probably make a whole video on that. Maybe I'll even cut that part out because I kind of went crazy a little bit there, but because I was just passionate about it. Because it's just using common sense, you should know, but not everyone has common sense, right? I mean, I hear it all the time. What's the interest rate? Okay, Mr. Customer, you obviously don't know what you're talking about. I'm going to give you the rate just because you're asking, right? So anyways, you have to look at APR, not the interest rate. Okay. Again, when someone calls me and asks me the interest rate, I'm like, okay, here we go. They don't know what they're talking about. Okay. They were probably fed a bunch of bullshit from 10 other loan officers. This is the interest rate. This is the interest rate. They're all fake because there's no application. There's no address, right? So I'm going to give you a real number for you to compare to fake numbers, and I'm going to lose you because someone lied to you. Right? And that's okay. That's okay. If that's what you're worried about, I might not want you as a customer. Like I said, I'd rather work with customers who love, know, and trust me, see the value, and if they like my rate and they think it's fair, that's cool. But if they're going to make a decision, okay, well, I'm going to work with lender A, B, C, D, and E before I work with Larry because Larry's half a point higher, even though Larry gave me the truth and these other guys lied to me. Right? Again. All right. So again, continue on the email. Right. I put the scenario most confusing to borrowers is when 2 lenders are offering the same nominal rate. That means the interest rate, and the monthly payments are different APRs. right. This is where people get confused, and I love the fact that this article talks about it. The scenario most confusing to borrowers is when 2 lenders are giving the same nominal rate, and the monthly payments are different APRs. In a case like this, the lender with the lower APR is required fewer upfront fees and offering a better deal. It says it right there. This is online. I mean, I probably downloaded this and screenshot this like a year ago, maybe longer. Okay. The scenario most confusing to borrowers is when two lenders are offering the same nominal rate and monthly payments but different APRs. In a case like this, the lender with the lower APR is requiring fewer upfront fees and is offering a better deal. Why is everyone asking about interest rates? Again, number 9, stupidest question you could ever ask. What's the interest rate? What's the interest rate? It's a stupid question. You should ask, what's the APR? Okay. So the bottom line, APR is a more accurate picture of total borrowing costs because it takes into consideration other costs associated with procuring the loan. It is crucial to pay attention to the APR. It is crucial, but no one does. Nobody. Okay. And of course, I have a source here, the link, whatever. Okay. And of course, I talk about like full disclosure. I have no idea why the APR is 4.464 higher than ours. I don't work for that company, right? And the only true way to compare loan numbers is to apply for both mortgage companies, send us both a contract, and make us both lock your rate. Meaning it cannot be changed, and they're comparing loan estimates. So again, I've been coaching this to my clients for at least a year or longer. Okay, itemized fee worksheets, which is what a lot of loan officers try to send off or pass off as a loan estimate, are fluid and can be implemented however the loan officer wants, with certain numbers staying static based on inputs like the APR. However, loan estimate, which is what I'm telling you again, is a solid way to really know what each side is really offering. Why? Because it's a disclosure. It has to go through compliance. It's not just the loan officer putting stuff into a PDF and sending it off. No, it has to be submitted as an actual loan, and the compliance has to review it and make sure the numbers are correct, and then they send it off. Compliance wants to make sure that the loan officer is being honest. See, that's the funny thing is loan officers or salespeople, they're going to say whatever they can to get the deal, and compliance is like, no. There's only certain things that you can do and make this a legitimate loan. Right? And that's I guess the interesting about mortgages is there's a little bit of selling and marketing and advertising, and there's a little bit of honesty, right? And compliance and accountability, right? And math, right? Math, you can't really cheat math, right? So again, I'm 100% willing to do the whole loan comparison thing, right? Once you show me the loan estimate, I will 100% disclose the true savings and who is a better deal, because you cannot dispute simple math. Like I said, you cannot dispute simple math. APR is simple math, but no one talks about it. Okay. And then of course I tell them, you can apply whatever. Okay. So that's my email. And the reason I read it because there's details in there that I wanted to not forget. And there's no way I memorized the whole thing. Okay. All right. So the thing that everyone's been waiting for, right? And before I do that, let me make sure there's no questions. Looks like my computer's telling me I got low resources. Hopefully you guys can still hear me. I don't know. Hopefully this is still recording. I don't know. It's been an hour since I've been on the call. So sorry for making you guys get dragged through all this before you got what I consider the climax of the class, I guess, right? Okay, so no questions, it seems like. I'm going to look at the chat real quick to see. Any question in the chat? No question in the chat. Nope. All right. So I'm going to go ahead and let you know what the last and most important part of this class is. How to get the best interest rates. Bonus that only I'm telling you this, meaning I don't think any loan officer is going to be out there telling you this. I'm telling you this. I'm telling you this as your loan officer. I'm telling you this as not your loan officer. It doesn't matter, right? And the reason why loan officers won't tell you this because they don't want to lose your business. Okay. It requires, and before I start, okay, it requires extra time and work, meaning you're going to be working more. Imagine doing double work. Okay. It may cause delays and extensions. Yes. Being cheap and trying to get the best rate is going to create possible restructuring of things, possible changing of things, right? So be prepared for that. Okay. So if you're on a tight deadline, you might not be able to employ this. Give it up, because they always say, if you want it fast but done well, it's going to cost you more money, right? But if you want to save money, you might not get it fast, or you might not get it done well. Sometimes you can't get all of it. Okay. So again, it might cause delays and extension. In this case, if you want to try to save money but still get it done right, then it might be done slower. Okay. You must be willing to deal with 2 loan officers. Yes. You can't get the best rate just working with one loan officer. I'm explaining to you why, right? But in order to get the best rate possible in this market, in what's going on, you need to employ 2 loan officers. You need to work with both of them. And it's okay if you tell both of them. I mean, I'm telling you right now, if you want to do this with me, I'm all for it. To me, it's an opportunity. Half of a chance is better than no chances, right? So if you want to compare me with every single loan officer that you work with, all the real estate agents, if you have loan officers that you're working with, you want me to employ this method for your clients, I'm totally willing to do that, because again, half a chance is better than none, right? But you must be willing to do it with two loaners. So full disclosure, you can be like, Larry, I'm gonna employ your method. I'm gonna use you. You're gonna be my first lender. You're my second lender, whatever. Just be ready to work with me, but get killed at the end. No problem. Again, half a chance is better than none. Okay. Again, it's not recommended with shitty LOs. When I say shitty LOs, I'm talking about LOs that you don't trust. I'm talking about LOs that won't be willing to work. I'm talking about LOs who are unavailable, don't answer the phones. I'm talking about LOs, maybe the big box online lenders. They're not gonna be able to do this. Okay, this has to be with lenders who you can trust, you can depend on, who want your business. They want to fight for your business, right? And LOs who know what they're doing. Okay, who are paying attention. They're not trying to trick you or sell you. They're really trying to help you get the best situation, right? I mean, there's been many times where I had clients who went with another lender and I looked at the loan estimate and it was a better deal. I'm like, hey, you know what? That's a better deal. Congratulations. I'll let you know when it's time to refinance, right? Because I'd rather earn your trust right now and tell you the truth and take an L today and tell you, hey, this is a great situation. Run with it. I don't blame you. I'm not even mad at you about it. I would do the same thing. I'd rather do that, earn your trust, so that when I call you a year from now, 5 years from now, and I want to refinance or maybe your next purchase, I'm the first guy you talk to, right? So I'm cool with that. Okay. So again, you have to be willing to deal with honest. You have to find an honest LO who's willing to work for you. Okay. All right. So once you have a locked rate, keep the favorite loan officer active. So what I mean by that is, let's say you have Gary Lee, your second favorite, and you have Larry Lee, me, your favorite, and you have Gary Lee lock your rate. You bring it to me, and I'm like, I can't beat this, right? I can't beat this. So you have the best rate. What you do is you go, okay, no problem. I'm going to go with Gary for now, with the rates the way the rates are. But if the rates were to drop lower, if you can somehow beat this rate, let me know. Right? And of course, you bet your ass I'm going to be paying attention to rates, because there's a potential for me to win a deal that's under contract if the rates drop low enough. Right? So now you have two loan officers, one of them that's locked and one that's floating. Floating, again, means you're not locking it. It's a term that we use, and loan officers, they trust me. They know the difference between lock and a float. Right? Locking means you locked it, you're done. You commit to rate. A float is like you're gambling. You're kind of seeing how things go. Right? So now you have two loan officers, one of them that's locked and one that's floating. Why do you lock one? So for safety, because if the rates were to spiral out of control, you have that lock loan estimate. You're set. You're not going to have to pay higher than what you already have, and you won't get disqualified, because like I said, a lot of clients got disqualified because they didn't lock the rate, because they refused to lock the rate. They want the rates go down, whatever, and they're no longer qualified. So when you lock a rate, you have safety. You have a backup, which might be your main, right? And then floating, because if the rates were to go down, which you might be afraid of, you can always switch over to your favorite lender, right? So let's say I have a client who has me as their favorite, Larry, and they go with Gary, and Gary has a 4.5, and I can't beat the 4.5, right? I'm at a 4.375, right? He goes with Gary, but he's still keeping me active. He's still providing me the documents I need. He's still allowing me to originate the file as much as possible. We can't order the appraisal. Obviously, the appraisal will be ordered by one person, and it's going to go with the one you think is going to win, right? So the appraisal is there, but we always flip the appraisal back over if needed. That's the reason why it's okay for two loan officers to be working. Okay, so you have the appraisal going with the lender that you think you're going to go with, unless rates were to change, and then if you have to, you can flip it over, but you still do the whole process, and you have until like about a week before closing to decide if there's no change in the rate that's going to make it worth it to move lenders, right? But if you do that and the rates were to drop dramatically enough for you to be like, wow, that's a big difference, then it's an easy switch. Okay, I'm gonna go ahead and go with you, Larry, because the rates are lower. Go ahead and lock it for me. I'm gonna lock it, right? And then now we just start the process of getting the information from that lender and bringing it over to us. And as long as we have a good week, we can probably do it with no problem. I mean, there's some. Well, actually, you might have to be a little bit more time, maybe 10 days, right? because there's disclosures, there's time, there's wait periods and such. But we already have the appraisal done, and we already kind of sort of started the processing and underwriting side on your file. So it's not like we're starting from scratch. But yeah, that's how you can lock and have a floating rate at the same time, and therefore guarantee a lower rate because the market may change in your favor. Right? Because that's the worst thing that can happen to you. Well, not really the worst. That's the second worst. The worst is the rates will go up and you didn't lock. Right? The worst that can happen is if you lock and the rates drop dramatically and you could have saved a lot more money. That's the second worst. Right? But by doing this, you're guaranteed to get a low rate no matter what with your favorite lender. Okay, it's not like you're going with a shittier lender to get the low rate. You have your favorite lender who's willing to work for you. He wants your business. You know, Larry Lee wants to work for you, wants to work for your business. And if I'm your favorite, of course, I'll be, flattered by that. And I'm gonna do my best to make sure you get the best rate. If the best rate is with Gary, that's cool, man. Again, I helped you get that better rate. Even if it didn't work out in my favor, I still help you. I coach you on how to do this. You see what I'm saying? And therefore, hopefully, earn the right to be your lender for life, so that the next time you need a mortgage, you call me before you call Gary, right? Unless Gary just did a really great job, he stole you, then of course there's nothing you can do about that. But I'm still gonna bug you, right? So that's how you guarantee the best rate no matter what. Whether you're going to lock right away and you can float, and the rates go down, or the rates go up, well, you're protected because you already have a lock rate. Okay, so it's a combination of those two steps, right? So, does anybody have any questions on what I just shared? Are you guys even there? Am I presenting to an empty audience? Happens all the time, so I'm not too concerned about it. Okay, no questions. Does anybody want to share any takeaways or thoughts or feedback? Did you already know this? Is this like, duh, Larry? Of course we knew this already, or is this something that may have been an upgrade in your thinking when it comes to helping your clients get the best rate? Anyone want to share thoughts or takeaways? All right, cool. Well, we're going to move on. I really appreciate you guys being on this call, of course. If you have any questions, obviously I'm here. I'm trying to give you all the answers possible. If you have questions, then I would love an opportunity to speak to you, no matter who you are, let's say agent, loan officer, or client, right? You can always reach out to me, Larry Lee, 832-606-2193. You can Google me. That's how you'll find me if you don't remember this information. You can email me, LarryLeeLeonard@gmail.com. Again, if you Google Larry the mortgage guy, you're more than likely going to find me. Me and some other guy who's like in Indiana, but more than likely you'll recognize it's me, right? But I really appreciate you guys being on this call. If you have any questions, let me know, okay? And oh, actually, you know what? Brad is typing. Do you have a question, Brad? Before I let you go, that's funny. I don't even know what that means. Brad says he's going to DM me. Yes, that's perfectly fine. Please, I would love to hear from anybody for any reason. Okay. So again, I really appreciate you guys being on this call. If you have any questions, give me a call, text me, email me, whatever you like. If you want me to be your second favorite lender or first favorite lender, I don't care. I would love an opportunity to fight for you to get the best interest rate, whether it's for you or your client. I don't care. To me, again, half a chance is better than none. So I will be that guy who will guarantee that you get the best rate, whether it's with me or with someone else. All right. Is that fair enough? All right. Again, this is Larry, the mortgage guy, certified veteran mortgage advisor. I really appreciate you guys being here. I'll see you guys later. I'm out. Thanks, guys. See you later.